Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. And in today's video, we are going to be talking about the stock market, the S&P 500, as well as a number of other macro charts and indicators, even taking a look at some of the magnificent seven stocks such as Nvidia, Microsoft, Apple, Amazon, Google, Meta, and Tesla. So starting off with fear and greed. As you can see, we are still down in extreme fear, and we'll take a look at the various charts, see how much this is reflected in the markets today, and if this is a little overblown, if this is a buy the dip opportunity, or if there's possibly more to come. But just considering some other macro charts that this has been expected. We've been talking about this since the November, December crypto rally, that around the inauguration time, there tends to be about 100 days, give or take, where it's down or sideways. And as you can see, there can even be some bigger movements down as well. This being almost 5% total. So possibly something to look for in the S&P. As far as zooming way out macro wise, we can see that the second year of presidential cycles does tend to be the weakest. And that lines up not only with the crypto cycle, which I know many of you are here watching this video because you like the crypto content here, but also the yield curve inversion as well. And that the yield curve, at least the timing of that, tends to coincide with what we might see reflected in this chart as well. That 2026 may not be the best year, but it could be times to buy the low. We'll see. As far as we haven't looked at this chart in a while, the Fed was cutting rates and they started back in September. Now, there's no doubt that we have been in a non recessionary trend since that rate cut. Now, middle September till now, it's been about a little over 150 days. So, right in here, and you can see on the way up, it is normal to get these pullbacks. This is 250 days. That would lead to summer. I've seen other charts where the trend can go much longer. But just something to keep in mind is that we are still tracking this. And yes, pullbacks do happen. I wanted to show you this chart. It's one of my favorite charts I've ever seen. And just something to keep in perspective should we get a pullback. And I think this sort of marries what I try to do with the moving averages on my channel as well. And just something to think about is that when the S&P declines 500, or the S&P 500 declines 5%, that happens every year. So 10% about every 1.5 years. And last August, we did get a 10% dip. But as you keep going lower, you see how much more rare these other dips are with the S&P 500. So if we see the S&P dipping 25% next year, just know that's once, twice every decade, every 5 years. So you don't want to miss that opportunity. Once a decade is at 30%. And then, as you can see, like a great financial crisis, dot-com bubble, or the inflationary rollover in the 70s, there was a 50% dip. That's not as common. So if we get somewhere in this range of 30 to 50%, that tends to be very rare opportunities to buy. And we'll just add, with inflation devaluing the dollar, once wages do start to catch up again, once the economy does start to catch up again after a recession, that organically sends the market higher. So I know it's hard with inflation and the devaluation of our dollars. Inflation is like a tax on all the money that we do save. So you want to invest it when you get these rare opportunities in the future. So something to look out for. This is another macro chart to say that we're a bit overvalued right now, right on the precipice of bubble territory, I would say. But just going way back, the S&P 500 price earnings ratio is overvalued. There's no doubt about it. The mean is down here at around 15 to 17. But if it ever starts getting below this, where is this level? About around the 20s, the low 20s. I think that's great dollar cost average opportunities for some of the top stocks. Now, we've seen Nvidia and Apple, a lot of these stocks. I think Google has the lowest forward PE ratio out of all the Mag 7, at least recently they have, but they're still expensive. And that's the way I view the stocks. Are they cheap? Are they at a discount? Or are they expensive? And right now, things overall are expensive. But we also take a look at the moving averages to help with that, to see how expensive is it. So going over to crypto, you can see still an extreme fear. But as I was saying in yesterday's video, that we have not seen this level of extreme fear since June of 22, and that's when Bitcoin was having a big sell off. It wasn't the very bottom was here, but just do know we have not seen this level of extreme fear in a while. In the 2021 double top that we had, do know that there was extreme fear this low before Bitcoin eventually made its new all-time high for that cycle at around 69K. So just something to keep in perspective. And I do talk about crypto, the cycles, charts, and indicators macro wise. So subscribe if you want to hear more about that. But with the S&P 500, on the weekly, we have the buy sell signals, and you can see that this sell signal, buy sell signal right here is turning red. And just with Heikinashi, as far as this bull trend, you can't see here, it's at the 20-week moving average as it's turning red. And so we want to see this trend line hold as well as the 20-week moving average. I'm sure we'll see different moving averages on the daily as we go there. But if it does dip below that and gets down to the 50, that's at around 56.50, give or take by the time it gets there. So something to keep in mind. And a move like that from the former all-time high, it's not going to be super accurate because we're measuring on the weekly, but that'd be a pretty big move around 8%. So an area to keep an eye on. But if we take a look at some of these moving averages, we'll see that, one moving average, it isn't as low as the 50, but we have not tagged it since October, November of 23. And that's the 200-day moving average. So that's above the 50. But if we saw a dip all the way to the 200-day, that's about 7%. So right now, we are holding the 100-day moving average and this trend line, but I'd be watching for this 200-day possibly. And you can see that just going horizontally sideways lines up with some of these wicks back here. So would not be shocked to see the S&P if it did get underneath there and go to the 200-day. Just keep an eye on that level. This could be a potential bottom, and if not, I'd be eyeing this 5,700 range in there. As far as the volatility index, let's see what volatility is doing. No doubt it has spiked up a little bit and has gotten to the 20 range. Anytime like in last August, where were we in last August? That's when volatility spiked super high. So anytime you're seeing volatility get around 30 or higher, you definitely want to be taking a look at deals in the markets. So right now, yes, we have extreme fear, but the volatility is saying, well, maybe not as much as we thought. So maybe certain sectors of the stock market are doing better than we think. We might just be seeing the top stocks, the overvalued stocks, the expensive stocks have their corrections. And those are the ones that have most people's attention. But that doesn't mean that the whole market's doing bad. So just something to keep in mind. And I think that's somewhat reflected in this chart here. This is the percent of stocks above their 200-day average. And you will see that when it gets around these areas, this has been local lows. So it could go lower. And I was waiting to see if it'd break above these moving averages. But this area around 45 to 50% tends to not be the worst area to dollar cost average in on some stocks at their local bottoms. This is another chart that I've just started looking at with y'all. This is basically it's a chart for the Fed looking at the difference between quantitative tightening and quantitative easing. And something that we looked at before was that QT ended in late 2019 when it hit this 100-month moving average. And where do we see QT sort of rounding off to? This balance sheet is coming down for a soft landing, trigger words, on that 100 week or 100 month moving average. And maybe once it starts to bounce up, that's when we see the hard landing narrative start to come back in the future. As soon as people start celebrating soft landing and recession avoided, and we get euphoric and in a bubble, that's when you want to. It's when you want to be on alert. It's when it's all good news and can't miss, and the markets are great. If you remember the pump it up days when people were buying Nokia, and in 2021, late 2020, the Wall Street bets days. If we're getting into that type of scenario of euphoria, that's when we see peaks. So do keep that in mind. Be greedy when there's fear. We have a lot of fear right now. This is the yield curve uninverting, as we've talked about. And in the past, there's been about an average of 600 days, give or take. Though this time, you can see there 600 days. This time, I do wonder if it's a little different, if that'll be extended because of how deep the yield curve has been inverted. So watch for inflation. If inflation starts to spike again, usually bottoms in the 70s have coincided with those inflation spikes. And so, 600 days, that's in 2026. But if this plays out a bit longer, because what the policies Trump's been doing with the tariffs, people have been saying he's trying to, if the Fed's not going to cut rates, Trump's going to try different policies to bring the yields down, to bring the dollar down, and that can artificially boost markets for a little bit longer. So just keep that in mind. But eventually, after this uninverts, mid, late 26, maybe the depth of this and the uninversion will be longer as well until we see that dip. Unemployment still all right. Let's take a look at inflation real quick, and then we'll go to the Mag 7 stocks. So inflation, keep an eye on this one. If it starts to get above that 200 month moving average, then yeah, keep an eye out for that. Bitcoin, we'll take a quick look at Bitcoin. Let's get off the monthly. And as you can see, the 20-week still holding up. The 50-week, that's around the mid 70s. So the candle body still above the 20-week moving average. And so far, the 200-day moving average still holding up, but there is some weakness there. So if it falls down past this area, you can see there's a large gap here until we get to prior price action. So if the 200-day is lost, do not be surprised possibly to see a bottoming around this 50-week moving average and the 70,000 range. And that happened, by the way, let's put this back on lock. That happened around last August as well. So just keep that in mind. All right, Mag 7 stocks. Let's start off with NVIDIA. They just had earnings, and I wonder if that's a sell signal, and it is. But this one's just been chopping around. So with a sell signal, would not be shocked to see it come down to that 50-week moving average at around 118, 119. And that's the 200-day where it had support as well. So around that 122 range to, 118. So might look for some support there. But if NVIDIA starts to break under that 50-week moving average, and you've seen what's happened before, that's 50-week is the difference between bullish and bearish. You want to look for more confirmation when we're bearish, so you don't catch falling knives, but you also want to look for discounts in that area as well. Microsoft falling through, and it's fallen underneath this wedge. So, we have these lower highs, higher lows, and it is breaking down right now. So next area to look for, the 100-week moving average is at around 386. So we have not been in this territory since 23, late 22. And for Microsoft, we can just zoom back. Look, it never really got to the 100-week moving average except twice. Before that, September 2015. So again, keep in perspective, how often do these things happen? As we talked about in this chart, how often do these things happen? And that's why I like the moving averages. We'll see just how rare it is that Microsoft falls 30%, 50%. And if it does, if Microsoft is from its former all-time high falling 30, you can see it right here, around 320, 50%. In a rare case scenario, somewhere around the 200s, then that's very rare. Those are very rare times. And just keep that in mind. If we do see that for a top stock like Microsoft, you definitely want to be looking to get in long term on that. As far as Apple, still looking pretty bullish, still in an uptrend. And if it does break that new all-time high and we start to see a recovery sooner than later, this 2618 fib here is at around 279. So do not be surprised to see some profit taking over there. But if it does come back down, we have the 1618 and the 50 week at around 222. Amazon, let's see how I click it. There we go. See how Amazon's doing. So Amazon coming down a bit, but let's take a look in the past. On the way up, it is liked this 50 and 100 week moving average. So if Amazon continues this downtrend, and you can see how it accelerated here, then had sort of a V reversal. So those targets would be around 197, and then if it wicks down to the 100 week again, that's 176. So 197, 198, and 178 by the time it might get there if it happens soon. Google coming down to the 50 week, and it is like the 50 week. So if you do like Google, maybe it's a dollar cost average opportunity for you. And like I said, Google is one of those that overall, does it have the price to, I know it has a PE ratio somewhere with this one. It's been a hot minute since I've looked at this, by the way. Let's do this. Does it have PE? There we go, 21.8. So 21.8 for Google, NVIDIA 49.8. So that's what I'm talking about as far as just expensive or cheap. That Google overall, a bit of a better deal, or cheaper, less expensive than some of the other top stocks. So Google, dollar cost average opportunity, no two ways about it. And yes, it can go lower, but if you're looking at Mag 7 stocks, you can wait for confirmation or just buy the dip here. And as far as Meta is concerned, we do have a sell signal for Meta, but this one, I would not be concerned unless it's really closing under these 20-week moving averages. And on this whole way up, it is not. So hopefully, knock on wood, it doesn't. But with these sell signals, it typically comes down to that 20-week moving average, and that'd be around 640. We're still looking at Meta getting possibly to the 860s, believe it or not. And then we'll close out with Tesla. And as far as Tesla goes, man, this one, it keeps falling down in this channel. It got to the 786 and that 50-week moving average. So big move down, and it is getting under that 786 in the 200 days. So if it's breaking under this channel, next area to look for is 241, net fib at the 618. There is that golden pocket area here, probably between 250 and 240. Going back over to the weekly, let's turn this on, it's driving me crazy. As far as the weekly, where does that match up moving average wise? So it'd be a little bit under the 100-week moving average. And you can see it did have a bounce off that. So if it does get lower, and you see there's some price action support here, yeah, 240 to 260 for Tesla. Anyways, let me know what you think in the comments below. I'll do a live stream tomorrow. My goal is to do those at around noon Central Time. So thank you for watching. Have a wonderful day.